Hello and welcome back to our weekly market recap. I'm with Rich.
Hello, everyone.
And I'm Knight. Let's get to it. So this past week, we saw the market down 0.71%. Still year to date, we are up 4.00%, so 4% flat. Now, we actually got some positive feedback from our video last week. So what we're going to do is we're going to have a couple comments and then we're going to have a longer form discussion. So what happened affecting the market this week? We had some economic data numbers that came in, both positive and negative. We'll speak about that. We had the Texas storm, or the Great Freeze in Texas. So we'll talk about how we see that potentially affecting the market. And then the bigger long form discussion that we're going to have this week is really around the GameStop hearing, what we saw in the House, and just about the fundamentals in the economy, how pricing in these equity markets work, and some benefits that we might see, or changes and implementation that we might see. So let's first start with the economic data and what we saw. So as for the initial jobless claims that came out on Thursday, we actually had worse numbers, and we did see the market sell off a little bit from that. We had 861,000 new jobless claims. Now, again, that's a 1 week lag, so that is as of February 13th, but we were only expecting 770,000 new starts. So we've actually seen, again, it start to decline. Now, one area to note is our continuing jobless claims. It's down around to 4.5 million, and that might sound like a lot, but we actually were close to 6 million, a month or two ago. So seeing that number start to come down is pretty good. And then the other big economic data that we saw that just blew numbers out was the retail sales. So in December, we were actually pretty disappointed because the retail sales actually dropped. But in January, we saw the retail sales up 5.3%, and we were only expecting 1.2%. So we do have some positive economic data also going against some negative economic data. Overall, Rich, anything to discuss about those?
Yeah, I think that what we're seeing with the retail sales is consistent with improvement in the coronavirus case numbers. They seem to be dropping, and as fewer people seem to be having terrible symptoms.
Yeah, so basically what Rich is saying, as COVID is getting better and people aren't having as bad of cases, numbers, the retail sales are doing well. So it's interesting to see that, and actually a good transition to the Texas storm. It's part of the reason why we're seeing COVID cases going down, because people aren't, not just in Texas, but across the country for, the past 2-3 weeks, we've just been seeing these storms everywhere. Everyone's just inside because it's so cold. There's nothing to do. Is that why these COVID numbers are better? And also in general, people are saying that this Texas storm is going to be the largest insurance claim that we've ever seen. What does that mean? The government had to step in to support the grid. There are a lot of crazy things going on in Texas right now. What are your thoughts, Rich?
Well, we've seen things like this happen. We saw a huge devastation when Hurricane Sandy hit up the East Coast. We had on Long Island, New York, that was a government-controlled utility. It used to be Long Island Lighting Company, and then it got taken over because they went bankrupt. And what was discovered that the government being involved in the utility kept the rates down, and as a result, there wasn't enough money to keep the infrastructure current with situations. And then when a big hurricane storm hit, it took much longer than it should have for things to recover, and there were much greater insurance claims.
So, Rich, specifically about Texas, what are we seeing there?
Well, with Texas, it's a much greater area, so we're seeing greater damage. Similar story. I think we're going to see similar reaction. a review. It'll be interesting to see if that has political ramifications because the Republicans have been in charge of that. And some of the more progressive cities are Democrat controlled. So there's been a lot of finger pointing back and forth. But right now, I think everybody in Texas just wants to make sure that they get their heat and water working.
Yeah, I mean, some of the photos have just been absolutely insane of the water, but then ice just everywhere on toilets and all the sinks and uh, washer, dryer. It's just been absolutely crazy, and our heart goes out to everyone who's in Texas who's being affected by that right now. But on to the lion's share of the conversation. What happened with the GameStop hearing in the House? Which it was interesting. You know, first off, just seeing the coordination, I will say, of what that meeting looked like. It was almost like we were just in on a internal discussion, and to see how some of those pieces work and how people were jumping in, interrupting one another, the technology issues. It was interesting to see, to say the slightest. But one thing that did surprise me was some of the statements around this is just for political show. People just wanted to go out there and say their piece. This is nothing's really going to happen. Nothing's going to change. It's just to, fire up their constituents. So I guess we could start with that piece. Rich, do you agree that this is just for show? Do we think that there actually could be some policy changes that come out of this whole event around GameStop?
Well, I think both are true. One is, obviously, if the cameras are rolling, there's going to be sound bites that politicians are going to want to make sure they get in, and they're going to want their constituents to hear that. So that's one. Two, there were real substantive issues that need to be looked at. One of the issues that were brought up, I thought was brilliant, and I agree with, is we've had this delay between actual transactions and when they clear. Since almost all transactions are done electronically, we really don't need much of a delay at all. When somebody makes a deposit.
Yeah, Rich, let me explain, what we currently see in the market, which we've seen since, we were literally putting in paper tickets. And so what happens is you place the trade, one day goes by, it still hasn't cleared. On the second day it goes by is finally when the trade clears. So what does that mean? As the retail investor, nothing affects you, but your broker, whoever you're doing your trades through, whether that's the TD Ameritrade, the Fidelity, the Robinhood, they actually have to hold that amount of cash aside for you for those 2 days. Now, let's say you're a retail investor who loves day trading. Let's say you've traded 5 or 6 times over those 2 days. Well, they have to keep holding more and more money for each of those trades over those days. So it's not like, oh, you trade once and you trade it again, you all of a sudden, you don't need to hold that cash for that first trade. No, your broker actually has to just keep adding those cash together. And so because we had a T-2 delay, we led to some issues. So Rich,
and what that means, sorry about that, Knight. What that means is that you could run out of cash technically because they're holding your money, so you can't do transactions, even though you bought and sold something, because the T+2, 2 days, hasn't yet occurred. Now, originally, when I first was in the business, it was an entire week, sometimes 10 days that they could hold the money. Then after the 87 debacle, it became T+3. I think that's the event that caused that. And then it got reduced to T+2. But if we really look at this, we have instantaneous transactions almost all the time. The banks know what it really is. They don't have to, it doesn't take that long to do accounting and to make sure that all the money's set, which is the original reason for why there was a delay. So that part of the issue, I think, is really worthwhile. And hopefully that does get changed. It would be much better.
And let's just say why did that come into play? Basically, what happened was Robinhood, which is known for restricting people from being able to buy GameStop. The reason why that happened was literally at 3 a.m. the day of them restricting the securities on GameStop to in order to clear enough. So basically, in order to have enough money to trade for that day, normally they pay something in order of 300,000, and or sorry, I apologize. It was, I believe, 300 million, and there we go, 300 million. And this time when they went to deposit that 300 million that they were expecting, it turned out to be 3 billion. So it was a magnitude of 10 times higher, which obviously when you're a smaller broker clearinghouse like Robinhood, they didn't have the capital. So what was decided, they did not have enough money, and if they didn't deposit $3 billion, they were not going to be allowed to trade at all any securities that whole day. Basically, every day, the clearinghouse, the broker, needs to deposit that much money in order to trade any securities. So they were going to be halted from trading anything. In order to negotiate a way to allow trading for the day, they had a conversation back and forth, and they landed on, well, let's restrict people from buying AMC, GameStop, and some of these other just astronomically traded securities right now. They agreed to that, and they were able to lower it from 3 billion down to 700 million, which was enough, again, still higher than what they were normally expected, but enough that they could actually pay it and still transact for the day. So the whole point from Vlad Tenev, who's the CEO of Robinhood, he was saying, yeah, it wasn't a liquidity crisis. It kind of was a liquidity crisis with their clearinghouse. I don't know how you say it wasn't, but his claim is that, look, it's not our fault. We were doing everything we could just within the rules. It's this T-2 issue that is really putting stress on the whole system, and it's not serving the system in any way currently.
Very good point. I do agree it's not serving the system. It does protect the banking system, uh, but as we see, it creates liquidity crisis when you have uh, a great deal of transactions on any given day, such
Yeah,
as
Rich, I just want to clarify, that's not my opinion that it's not serving the system. I think that the reason why they have it in place is for actually these wild, crazy events where we see this spike in trading. Well, what is this, this stopping? What is the point that actually shores up the market to make sure that these banks are going to be okay, that we're not having too many trades, we're not losing. So there is a benefit in some ways to having this 2 day, but overall it might not be serving, and there might be a new way of doing it. But really, the other big question that came up from this was the question around retail investors versus accredited investors. Do retail investors need to be protected? How should they be protected? Is protecting the retail investor not letting them invest in GameStops and not letting them the access to shorting options, all these different pieces, is that actually hamstringing them from being able to get good returns, the same returns or the same tools that hedge funds and the people on Wall Street can use? And it has been a pretty heavy debate, and I'm going to be honest with you, I don't really know where I stand, because I kind of see both parts of, I do think that retail investors, one, I think on average, we have a much better education system. Now, they're still lacking in many areas, but I do think a lot of younger investors know a lot more than they potentially used to. And at the same time, there's still so many people who don't know about the stock market, are treating it more like gambling than actually investing. And is there some importance to protecting them?
well, the SEC got created to protect them from abuse. And so there's a long history of protecting them and part of that has always been there were certain types of transactions that were made very difficult, if not impossible, for retail investors to do. Uh, as things have evolved, we are now looking at what makes the most sense today, which is what you were talking about. Uh, I think some of the rules need to be changed. Uh, it obviously we need to have protections in place. We need to make sure that the brokerage firms don't go under while people are trying to trade. We do have protections in place with that. That's why SIPC exists. That's why in the banking system, the federal insurance exists. So we do have some things involved. But obviously, this is showing us that there are some areas that new regulations are going to have to be created. And by the way, this is actually a good thing as far as I see, because this is how we learn where the areas that we do need to regulate.
Yeah, well, it's interesting, the payment for order flow has been a really, heavy topic that also came up a lot, and how, we have this idea of zero commission, but when you have zero commission trading, what is really happening? Someone's paying for your trades to go to them. And what happens there? Are you really getting best execution? Is someone else potentially giving a lower execution, but because they're being paid to be off, flowed to a different clearinghouse, is it better? Now, it's really hard because I've seen so much evidence on both sides saying, actually, this, commission-free trading has saved billions of dollars for individuals, and people are actually getting much better execution than they used to. All of that could be true. And are we still getting the best execution and helping the markets? So I think that is an area in some ways I would say has really been not looked at for so many years. So for a light to being actively shined on this area, I think could be really helpful.
Absolutely.
Yeah, so overall, I think it's hard for either of us to say that it's, any brokerage's job to protect the retail investor. It's any individual. People all have different reasons. Some people believe that GameStop at this level is a fundamental play, and they really like where the stock is trading at and want to invest in it for that reason. They think it can pivot. Who am I to say, oh, that's not based on some sort of logic? So I don't personally believe in that, but someone might. And that's the whole point of investing. You have one person who thinks it's not, and the other person who thinks it's going to. That's how you have a buy and sell at the same time. So I think it gets really hard when all of a sudden we start to put rules in place that limit individuals from trying to buy and own the securities they want, where at the same time, I mean, how bad do I feel for the people who thought GameStop was going to $1,000 a share, so invested their whole life savings at 480, and now it's trading at $40 a share? Should those people be protected? I don't know. So it's a hard question to talk about. I think we are by no means close to being done with this conversation, and I think Congress is going to have some new legislation by the end of this year to address this.
I hope you're right.
Now, well, anyways, thank you guys so much for listening to us and our conversation back and forth. We know that people were enjoying that last week. Let us know if you enjoyed this style more. As always, we're here to support you. Your money's here to support you. If you have any questions, please reach out to us, and we'll see you again next week. Bye.